Where does the rental market stand today? Will things continue to spiral, making it even tougher for tenants to actually be able to pay their rent, bringing landlords to the tipping point? Or is the worst behind us and we can finally start moving forward again? And it seems like there is positivity on Wall Street in the papers. However, the main streets are looking a little bit more mixed. But it is important to note that the average American consumer is actually extremely positive that things are indeed going to get better. And you know what? With the new data coming in that I'm going to be sharing with you guys, it's looking like there's actually reason to be optimistic. But with that said, let's actually try to separate ourselves from the pixie dust on Wall Street and the crazy headlines that we just keep on seeing in the news, so that we can actually dive down into these numbers to where we can actually use the numbers correctly so that we can stay in front of all this chaos. Hello everyone, this is Bob and I'll be giving you guys an update on the rental market in America. And on top of gathering all of this information and telling you what's going on, I'll also be sharing with you how the 1,000 properties that we're currently managing is actually faring, because getting all the data in the world isn't quite as possible in the property management realms, but luckily we have a really big piece of data that we can actually take from our portfolio. And I'll be breaking down some of this information into relevant subgroups, such as single family homes or college housing or lower income apartment complexes. And then once I have filled you in on all the information, I will help you guys understand how you can maximize your returns in this changing market, because how people are renting homes and managing them is really changing way faster because of what's going on right now. So we've got a lot to cover. But before we do, as you can imagine, this stuff takes a really long time to put together for you guys. So if you could, take a hammer and smash that like button for the YouTube algorithm. It would be really helpful for us and our small business. All right, let's get into it by actually looking at some more of the macro level data that is affecting everything in the rentals market, so that we actually have a better lay of the land when we start actually drilling into the rentals. So first up is unemployment, which is actually doing incredibly well right now. In fact, even the economists have had to get a little more humble on their predictions, because they thought it would be way worse, but apparently businesses are actually rehiring, which is great, because that means that the EIDL loans, the PPP loans, are actually achieving at least part of what they were set out to achieve. But do note that this chart we're looking at right here, some of this is a little bit almost too good to be true, so we might want to double check that, but it's showing that states are starting to rehire as the market reopens. And now another macro point, which is just the vacancy amount on residential homes. So nationally, at the end of Q1 in 2020, which is the end of March, the vacancy rate was sitting pretty at 6.6%, which is basically as low as it actually can get, because people end up moving, things have to get turned over, then there's like a couple weeks, when you rent, you don't necessarily move in immediately, you wait till the first of the month a lot of the time. So 6.6 really is almost as good as it really can get. And new numbers on this are coming in at the end of June, but we're not quite there yet. So it's hard to tell you what the vacancy rate is on a national level. But that does not necessarily mean that I cannot give you information at least on a state and city level. And because I am in Arizona and we operate in Phoenix and Tucson, I can give you some data on that. Now, pay attention to this Phoenix amount, because Phoenix is a top 10 market for rentals, and it is a primary city, meaning it will operate a lot like LA, Dallas, and others like it. Now, it's not the same because it's not the same city, but because they're primary cities, they tend to somewhat work a little bit like one another. They could be at different stages in the market or what have you, but this is at least a general yardstick for you guys in the meantime. And these numbers, while not perfect, are really not that bad either. In fact, Phoenix is doing really well. And now to the stimulus checks, because a lot of people were wondering, well, are the tenants that are receiving these checks going to use them correctly on like food, gas, and especially for our purposes, rent? Or as some landlords just completely believed, are they instead going to put it all into Starbucks coffees and Apple stands? Well, according to the now national average savings rate, bam, it has completely jumped, meaning that the average consumer is now really being conservative with their money. So can we just, applaud ourselves for a moment? Because we just hit the highest savings rate, it looks like basically ever. And in the short term, I'd say that's a really good thing, and is at least an indicator that these stimulus checks are probably going towards things like rent. And as a side note for the general economy moving forward, this does show that there is some truth to the argument of there's pent-up demand. Meaning, when people actually get comfortable to spend again, they'll have some money to spend it on. So with all of that in mind, it's looking like the average consumer, i.e. the average tenant, is actually in a decent spot given all of the business rehirings, the stimulus check being spent wisely overall, and the vacancy rate staying relatively stable. And because the vacancy rates actually started at very, very strong levels. I mean, if we were already at a vacancy rate of, 20%, way more average landlords, people who just own one property or maybe two, way more of them would be foreclosing. And let me tell you, if you're a tenant, 9 times out of 10, that isn't really better for you. Unless, of course, that landlord was just the worst. But with that said, this generally positive data doesn't always translate to you specifically. I mean, I totally get it. I've been in the position where everything's great, but it wasn't for me. But there are ways to help you maximize what's going on. And buying and working this new market correctly is imperative to ensure that you continue to get benefits from your rentals. Just like there's a whole lot of opportunity on YouTube in our SEO, but if no one smashes this like button, I'm just not gonna get anywhere with my small business. So let's get into some extra information on how rentals specifically are actually doing right now. So let's get into some of that actual rental data. And this rental data is especially cool because it's not even just from us, it's from hundreds of other property management companies. So I'm just gonna share the broad strokes of what everyone is showing here at the top. Okay, so we'll ask a very general question like, for May rent, what percentage of your tenants paid rent in full and on time? So under 40% if you're really getting hit. Under 1% of people are getting hit that badly. And then it continues up to 50%, not even 1%, not even 1% on the 60. And then we start going a little bit higher, and then 7.4, 22, 65. So it's looking like, for the most part, people are responding between 80 and 100% rent collected, which is where our own company is in, and we're actually getting onto this side now. So it's going pretty well overall. And then here's another question. Did your firm offer tenants a payment plan for May? And we definitely did. In fact, if you want to learn more about how you should interact with your own tenants, like if you're on your own, if you're not in a property management company, you're a landlord, check out this video, and this will help give you a better understanding of what's going on. But let's say you have a payment plan for May, and if so, what percentage of your total tenants agreed to a payment plan in their May rent? And then it goes back up here. And it's looking like a vast majority of people didn't do this. 1 to 5% had to have a payment plan, and then 5 to 10% had another payment plan. And the reason why ours, it really was closer to 5 or 10% for us, but the ones that were needing this the most is, unsurprisingly, the people who are in the Class C or even Class D properties under management, where they were paying less and their jobs were more like service industries or something like that. Or maybe they just put no because they didn't want to do it at all. Yeah, see, like this one, no offers. They just didn't offer it. So as of end of grace period, what percentage of tenants did not pay any May rent? It's looking like most people still paid the rent. And I think this stuff is really good, and I actually find it really reassuring because these numbers aren't as terrible as you might think. And as you can see, they're from all over the place. It's not just where I'm from. It's Denver, it's Dallas, it's Orlando, it's San Antonio, it's Atlanta, it's Boise, it's Fort Worth. It's everywhere. So overall, it's looking like nationally, rentals are not doing that poorly for residential. It's actually going overall stable. And our own performance has actually been really, really good. In April, we collected 97% of the rent. In May, we're at 95%. And in June, we're currently at 83%, but you gotta remember, not all the rents are in. We have people on payment programs. But overall, we're doing pretty good. And this chart is actually really fantastic, but it does have its limitations because it's all professional property management companies. It's not just, a landlord and he's taking care of his own stuff like I used to do. So if you want to, another way to do this is you actually comment in the comments what your situation is as a landlord, how many rentals you have, and what's going on with you, and in what city is it going on in. And I think we'll actually find a lot of value in that. Or if you're a tenant, how has the landlord been treating you? Like, was it good? Was it bad? Did you guys come to a conclusion, or was it just nasty? And if it was, I'm sorry, that's not fun. Out of a group of 100 people, most people are doing okay. But how are each subgroup doing right now? So for example, the college market, like if you have a place and you have college students rent it out and they go to college and everything else. So what we're seeing going on with those is, at first there was some fight of like, oh, well, we want to get out of this because this is like an emergency. We don't have to pay. We're not even living there. We're going to go back home. It's not safe. And that is difficult for people, and we understood it. But at the end of the day, the guarantor forms came into effect. And aside from maybe a couple more people that we're still fighting with, those landlords are getting paid on their properties because of those leases. Now, with that said, renting those properties up for next fall has been really difficult because a lot of colleges, almost none of the colleges, have firmly said, okay, we're going to be opening up campus again. You're going to be able to go to a physical class. Basically, the colleges aren't fully committing to anything right now. And that makes sense. What if we have another wave? What if we have this? What if we have that? But if colleges do start to firmly commit to actually opening, you are going to be busy. Another property subtype is actually elderly homes. Those are being affected quite harshly right now. And as you might imagine, they don't want to all put a bunch of elderly people into the same house. They have lower immune systems and are more prone to getting the disease in the first place and then it not going very well. I mean, I'm not going to be a complete pro on this one, on when this one gets improved, but I would assume that having an actual vaccine that the elderly could take, thereby reducing the chances of them getting it, or at least reducing the effects that they have if they do get it, should help it a little bit. But I could also see this just being a stigma against elderly homes moving forward. That said, on the positive side, they are one of the fastest growing markets because of the baby boomers, so maybe, it'll offset and just keep the market growing anyway. And the submarket overall that is getting hit the most is also not really a surprise. That is the lower income housing properties that are not on vouchers and they're not on Section 8. They're just people trying to make it out on their own, and a lot of the time they work in the service industry. Maybe they're a waiter, maybe they're a bagger, maybe they're an assistant to somebody, a blue collar job. It doesn't really matter. It's in those ones that have been getting laid off the most. And of those are actually the vast majority of why we still float around 90s on our rental. And those are really the main ones that aren't paying right now. And those are the main ones that are needing payment programs. So again, I really encourage any landlord that if you can do it at all, try to get a payment program for these guys. Because if anything, you want to keep them if they're a great tenant and it does look like the market is reopening. And from a completely pragmatic point of view, if you're just like, oh, well, I'm just trying to maximize my money, so I got to kick them out. It's like, well, actually kicking people out costs money. You gotta go through that process. You gotta pay for a turnover. You gotta pay new rental fees. You gotta go through that time. And if the market is reopening, maybe it's worth just working it out with your tenant. I hope you do. And now for the property type that's doing the best, which is Middle America single family homes. They are killing it. Just about every single one of our properties, aside from a couple, are paying their rent in full. Those are going really, really well, which is great because I've been selling hundreds of those single family homes to private equity funds. Turns out the underwriting was good. In fact, single family homes are renting out ridiculously quickly now, actually faster than normal, because so many people who have a single family rental home are afraid to put them on the market. So they're renting like crazy. In fact, we put up 3 homes up for rent all at the same time, and within a day, we had 8 to 10 applications on every single one of them, and we were getting hundreds of emails and texts combined every single day after day after day. So the single family home market, especially in Phoenix, is going bananas. And it's going quite well in Tucson too. All right, so that is the basic information that you need to know in the market, but how are you actually going to maximize your returns on this information? Because here's the thing. A big reason why we're getting so many inquiries right now is because we actually have a good online presence. We put our leads up on all the sites that you should. We have good SEO for our website, so we show up on Google very quickly. And we have these videos and all these things that funnel people into either getting new management with us or a tenant looking to rent a new place. And so if your only marketing material nowadays is offline, as in giving out postcards or putting a sign up in the yard saying for rent, that's really not going to work as well anymore because people aren't driving around and aren't as willing to actually go into properties like they used to be even a month ago. And people not being willing to go around to look at rentals, it doesn't just stop there. For example, open houses have gone virtual with going live on Facebook or YouTube. Just about everyone is now paying rent online because they don't want to show up to the office. Work orders are online, accounting should be more online. Basically everything needs to go online if you haven't done it already. And if you have done it, you need to start getting better and better at this. Otherwise, it's going to be really, really tough for you to actually rent out your properties, especially if you have a ton of them. But if you are just renting out 1 or 2 properties, you still can pay for, third-party sites to show your stuff, like on Zillow and everything, or you can go the free route and use Craigslist, which has varying degrees of that actually working out well. So you do need to know what you're doing on those things. And the reason why I'm even saying this in general is I just don't want to see more people getting shuttered, and I don't want to see little landlords getting, squeezed out by the bigger guys, because we've seen enough of that already. And honestly, I'm still no big kahuna myself, which is why I'm always asking you guys to smash that like button, because it helps me with the YouTube algorithm. It helps me show me to the world, because otherwise I get pummeled down by the bigger, super strong channels that have been around. And if I don't ask you for it, I will die. So if you could just click the button, that would be very, very helpful. You wouldn't believe it. And as a final tidbit to help those who are out there on their own and are not using third parties for anything, a few things that you could do to actually help you rent out your property or maximize the value of your property is, right now, if you're really stuck on the budget and you weren't getting rent and you're one of those people in the worst case scenarios, it doesn't matter how good these numbers are on the market right now, you've still been affected, is maybe you want to look into improving your property more, but doing some of those things yourself. The things that are actually a high cost in labor. For example, painting the interior of a home is not nearly as expensive if you do it yourself. In fact, almost all of the money goes towards labor. And if you have any ability with a brush, well, then it might be worth it. Another thing that could be totally possible for you to do on your own is putting down new carpet. But again, results may vary. So to summarize, it is looking like the rental market is holding relatively steady, and that it actually does have the ability to come back relatively quickly as the market reopens, pending nothing else traumatic happens to us. But the one thing that could be really long lasting no matter what is people's new habits and how they approach renting real estate, paying for real estate, asking for maintenance work orders, and what people expect from people in the industry. So I hope that was really helpful for you guys. Again, I'd really appreciate a like if you have any questions, comments, concerns. I know I can't answer every single thing in these videos and keep them interesting. Please put them in the comments. I answer every single one of them. And guys, honestly, I hope this was good. Please stay safe out there and have a good one. Bye.